I'm too hot. Call the police and the fireman. I'm too hot.
To the market snapshot, this is Dan French from Nova Home Loans. I am your go-to loan expert here in Las Vegas. And I'm here today with my friend here, Chakits Krulawat from Simply Vegas. Chuck, happy Easter, man.
Happy Easter.
I also want to tell Doug here. Doug's our producer. Doug, happy Easter. How you doing today?
I'm a little sad today, Dan.
What's going on, Doug?
Today's Easter, and you guys didn't even bring me in a chocolate bunny or nothing.
Well, Doug, you know what? Here's the deal, man. You know, when we're barely getting here on time as it is, it's really hard for me to stop and get that chocolate bunny for you.
But you knew Easter was coming.
I did.
I
owe you.
It's okay.
I'm going to get you a life-size chocolate bunny. It's going to be one of those big ones that
3-foot ones?
Yeah, the 3-foot ones. That way you can gnaw on it for the next year.
Oh.
Well, Doug, I got 2 eggs for you.
We also want to talk a little bit here. Chuck, it's always a pleasure educating the Las Vegas community, right?
That's right, and that's why we're here 7 days a week. I mean, we never take a day off. We only take breaks.
So I want to tell everybody, thank you for tuning into our show. I know it's Easter. Real quick, I want to say happy Easter to everybody out there. And Chuck, do you celebrate Easter?
Probably about 20 years ago when I was a kid, but not anymore.
You don't color eggs.
Well,
Are you hatching over there? I got you. Yeah, I remember when I was a kid, I used to go out in the backyard. I never really cared about those colored eggs. I always cared about that money ball. You know, I wanted that money egg with the. Always looking for that golden one. You get that $20 golden egg.
Is that it?
You think you're rich?
Bucks?
Man, at 7 years old?
I guess so. Yeah.
I mean, how much candy can you buy with $20 at 7 years old?
Today?
Well, I guess you're still looking for that money egg, huh?
Yeah, I know. Well, hey, on the news today, news and events, the Boulevard Mall, located in 3528 South Mainland Parkway, is going under renovations, $25 million worth. The first phase is scheduled to be completed in May. Mm-hmm. The remaining of the project will be finished by the end of the year. Uh-huh. It's located in the zip code of 89169, which actually that zip code had increased by 36% since February 2014.
All right.
Okay. Mm-hmm. Nevada ranks 8 for identity theft. The new National Consumer League data confirms that Nevada is ranked number 8 of identity theft.
Number 8, identity theft.
Yep, number 8.
Number 8.
Mm-hmm.
Okay.
Now, credit cards and utilities frauds account for most of 2,826 identity complaints received in Nevada. The average amount reported was $4,296.
Wow,
Have you
that's
ever
a lot.
Have you ever had a problem like that when somebody was trying to get a loan and
actually it's happened a couple of times on their credit report. Yeah, they have stuff show up and they're like, hey, I don't have that trade line. It's $200-$300 and it does affect them because they're getting hit with a payment. And a lot of times what happens is that they got to go and address it within the credit bureaus. They got to dispute it and find out why it's on there and then find out what's the path to get it resolved. And we really can't move forward on getting that approval because really that's it's not their trade line. We can't hit them for that debt. But again, we can't just keep moving the file forward if you have something on there. So
wow, that's got to be tough for a client like that.
Yeah.
Oh, McCarran Airport reports that the monthly passenger jumped since August. Uh-huh. Passenger counts continue to soar at McCarran International Airport as Clark County Aviation Department Thursday reports that fifth best February on record and the largest most percentage increase in passengers since August. 3.2 million passengers in February, a 2.9% increase over the previous years. Mm-hmm. Tourism has increased with the convention center. Strong convention center attendees boost February's visitations total, and the city's average daily room rates continue to expand. The Las Vegas Convention Center and the Visitors Authority reported Tuesday convention attendees grew 12.1% to 550,000 people.
So what you're saying is there's a lot of activity in Vegas. There's growth coming here, right? And the rooms are going up. Things, like you said the Las Vegas Convention Center is starting to grow and it's starting to attract a lot of people, correct?
That's correct. And when we spend more money here, people got to pay taxes.
Right.
You got to hire the hospitality. People got to move somewhere. They got to live somewhere.
I remember, maybe 5-6 years ago when Vegas, went through that transition and there was, the economy went through a really bad transition. There was not a lot of people coming here to Las Vegas.
Yeah.
You know, and it's really a good sign to see that there's stability and that the market here is starting to increase, activity starting to go up. We see building going on around the city. I love it.
And here's the thing. If you're out right now and you already own a primary residence, you may want to start looking to buying an investment property. Now's probably the good time to start looking.
Yeah, I agree. So also I want to talk about sluggish start for the new year. And what I wanted to talk about was new home highlights, okay? New home closings. The count of new home closings in the first month of 2015 was relatively soft. The 357 new homes that closed in January 2015 was dramatically lower than the 620 units that closed in December 2014 and down 11% from the 401 closings in January of the prior year. The new home supply, the number of new homes permitted for construction also shipped during the month. January 2015 permitting volumes totaling 403 homes, which was down 477 in December 2014 and 440 in January in the prior year. Chuck, when you see this and you see that January is a normal month for sales to decline, is that correct?
That's correct, because it's obviously the beginning of the year. Everybody's starting to settle in, trying to figure out what's going on.
Yeah.
And by February, things start to slightly increase and start to pick up. That's what we're seeing here.
People get those tax returns and now they got money to put that down payment, right?
That's right. Give us a call.
So also I want to talk about the existing home highlights. Existing resale home closings. The number of existing home closings in January 2015 slipped to 2,593, which was down from 3,344 in December 2014. This is a 13.6% drop. And, again, it's another indication that when you start the new year, I think everybody's just kind of getting past the holidays. People are starting to get into the new year. They're trying to get settled. They're trying to get things moving. And I think their mindset really is not to buy a home at that point. I think there's some out there.
Yeah.
Obviously, the motivated people out there that are trying to get a home, they're definitely looking. But some of the people with families and things, maybe some people that are counting on the tax returns and stuff as far as getting that money for down payment, that usually starts out at end of February. So I've seen in the last couple of months, I've seen a huge, significant increase in activity.
And also what I think plays a big factor with all these new home developments taking place too as well. I mean, we're starting to see a flood of properties coming up on the market. And
yeah.
It's kind of dragging everything down, and that's why the buyers are, taking their time. And we're roughly around for about 7,500 homes just for single-family residents, detached only. So.
Well, the resale availability, the number of units available in the multiple listing service moved sideways in January to 9,312 units. And then if you look at the bank foreclosures, repossessions, foreclosure volumes were modest in the first month of the year as only 200 units were foreclosed upon. That's low.
And keep in mind, we're about 4% at this time.
Also wanted to tell you about first homeowners that moved into the Cadence community.
Woo!
They cut the ribbon, if you want to say, and the first family moved in.
Does that mean they paid premium price?
Probably. I don't know if they moved in with negative equity, but a lot of times they do, right? So we're going to go over the market rundown, and here's what I want to talk to you today about, Chuck. Housing market statistics. We have interest rates trending, self-employed income review. Chuck is going to talk about how to take title to a property. We're also going to target millennials today. We're going to put in 20 ways millennials can increase credit rating.
Wow.
And then we're going to always end up with the lender versus realtor face-off. I really want to fight you today, Chuck.
Do you really?
Yeah, I feel like there's fists and gloves involved.
You won the last one, didn't you?
Just barely.
Barely? Okay.
Yeah, you were fighting me. So what's going on with the housing market, Chuck?
The housing market. This is what we bring it play-by-play, week to week with the market data. According to the multiple listings service, overall inventory has declined by 5.1%.
Yeah.
And a 3.9% gain of all home sales sold since last week. Private sales still hold 85% of market share. Short sales still at 11% with a slight tick up. Bank-owned properties are around about 4% in today's market.
Okay.
We're going to be talking about townhomes a little bit this week. I don't want to just, only just talk about the overall market.
Yeah,
so we're going to break it down week by week.
Yeah, I agree.
So this week, townhomes.
Yep.
We have about 645 townhomes currently available for sale.
There you go.
81% are actually private sales, 15% are short sales, 4% are actually bank-owned properties. This sector has been stabilized since the beginning of the year. Now, on the rental sector for a townhome, the rental market has increased by 39% since last week, okay? And also holds about a 6% of all properties currently listed for rent at this time. So it is a good property to buy, to invest for a rental property. Okay. Now, I had a client that came in last week. He wanted to buy a townhome, and he asked me, should I buy a single-family residence or a townhome? And we were looking at a townhome. It was worth about $150, and a single-family residence at $150. You know, I'd advise him that he should probably lean towards a single-family detached home because there's going to be more value there when you go ahead and sell the property because you're going to open up a more of a demographics. Also, typically on the HOAs are a little bit higher, I notice, on the townhomes. So he's going through that debate right now if he wants the townhomes or not.
Well, if you're financing either condo versus townhome, I can finance a townhome anytime.
It would be easier than a
lot
condo,
easier,
right?
Yeah, and here's the thing. If you're buying a townhome, if you decided to resell the townhome, how easier is it to resell that home versus a condo?
Well, on a condo, you're going to have to find that certain type of buyer, and you would have to find that cash buyer. And typically, cash buyers are going to want a little bit of a discount. On a townhome, you'll be able to push that townhome, but as far as a single-family residence, you'll always sell that single-family residence before a townhome and also a condo.
Yeah, and I think if you have a condo and you're somebody that's selling a condo, you're a condo owner, you're looking also for cash because you're not going to have as many finance buyers out there making offers.
That is correct. And we just took a listing that has 4 condos, and we're running into that issue right now. So we have to find a cash buyer. Okay.
We got a caller.
Oh, really?
Yeah, we got a caller. Madison's on
Easter, huh?
Yeah. Madison, are you there?
Yes, I am.
Well, how you doing today, Madison?
Good. How are you?
Good. Happy Easter. How can I help you?
Thanks. Same to you. I just had a question. Actually, it's a question for my sister. She's been trying to get her credit up, and it seems like she's been paying so much money, and her scores are really not going anywhere.
Yeah.
And I've heard you talk about you have a free credit service. How does that work?
Yeah. I mean, a lot of times you're dealing with things that you can do on your own, in my opinion, on your credit. And I really feel that in some situations, some people are paying for money more than they should on getting their credit repaired or getting things removed from their credit. And I told you at Nova Home Loans we have a free credit services, and I can tell you right now, we'll not only give you a game plan about what to do for her, but also we'll tell her exactly how long it's going to take her to get her scores up where they need to be so we can get her a loan.
Okay.
The best way to have this happen is she can call me. What I typically do is take an application over the phone, and then I direct it right over to my credit services department, and you can give us a call outside studio at 781-6682. That's 781-NOVA. And we will schedule a free consultation. If she doesn't want to come in, that's fine. We can do the application over the phone, and then I'll direct it over there since we already know that there's a credit issue or things that need to be removed or helped with her credit.
I mean, that's very important because here's the thing. If you're thinking about buying a home but you're not ready to buy, you got to get started somewhere. And if you're not ready because of some issues, at least you have that timeline. So that way when you are ready, you can position yourself.
Madison, I don't know what your sister's already paid to get this taken care of, but give me a call outside studio. We'll get you guys going, and maybe we can set up a free consultation, okay?
Okay, thank you.
All right, Madison, thank you for calling in.
Bye.
All right.
How many people like that have you helped? I mean, probably a lot, huh?
I can't count. And I'm being honest with you. I mean, I have so many people that come and use our credit services that I really got to put reminders on my, through Outlook and other things that I use to call them back because there's that many people out there with significant credit impact, things on their credit that need to be looked at. They might only be 10 points away from getting approved for a home loan, so I got to call them back, 30 to 45 days. These things are important because they know and have that game plan what they need to do to get to that point.
But you only can hold their hand so far. So basically, once you put that ball in their court, they got to make it happen.
That's
too
exactly
as well.
right. But I'm pretty adamant on calling people. And, the thing with me is I'm not going to call people that are, if they're a year out, it doesn't make sense for me to call them every month and be like, hey, where you at?
Yeah.
But I will put a reminder after a year and say, or even 6 months. I might even put a 6-month reminder just to kind of keep their mindset rolling like, hey, you got a free credit services, take advantage of it.
Mm-hmm. Is that the longest you've dealt with is a year?
Yeah, I think we do a cutoff after that. So we also...
He's playing.
I'm just playing. So I also wanted to talk to you guys today. First off, if anybody has any questions outside here to call into the show, you can always reach us directly at 702-257-5396. My consultations are free. All right, we've been joking around that they're $9.99. You get me upset. I might do a $9.99 charge on your HUD like you talked about. But
free $99.
I'm just playing. But everybody out there, you get a free consultation from me, okay? Call in studio, 702-257-5396. We also put together a series of educational videos. What is that, Chuck?
Take Notes is a library of educational videos of real estate professionals in the industry and was created for the first-time buyer, investor, seller. Visit simplyvegashomes.com. The navigation on your bar on the right-hand side, go ahead and click Take Notes.
Let's go right into interest rates trending. Mortgage bonds price finished the week higher, which pushed mortgage rates lower. Rates were positive the first portion of the week and relatively neutral data. Personal income rose 0.4% versus the expected 0.3% increase. Rates improved Wednesday morning in response to the ADP employment report. Again, the ADP employment report came in at 189 versus the expected 225. So overall, rates improved considerably Friday morning. Mortgage interest rates finished the week better by about 1/8 of a point. So we go back to the beginning of February, and we've discussed this throughout the shows. Today, we're about 1/4 of a point difference since we started losing pricing. So that's good news. That means that interest rates have not started to go up yet. They actually went the other direction a little bit over the last previous weeks. But what I want to tell you is that resulted in rate declines when investors interpreted the Fed statement on Yellen, indication that the rates would rise later than sooner. So remember we told you that because that indication of her saying, hey, we're going to hold off on raising interest rates, I think it's really kept rates low. It's kept things for me as far as at work and things that I need to work on. I can still get really good rates for people. Right now, I just want to tell everybody, if you have not looked at the idea of refinancing your home or purchasing a home, now's the time to do it. I know we've got pricing that has gotten better, but I want to tell you there is no, we can't see the future here. So it could go up. I'm going to say it will go up. I don't know how much it's going to go up, but it will gradually go up at some point.
And how often are you watching the rates?
I watch the rates every day, and I'm going to go right into this because, we have a money savings of the week. And what I wanted to tell you about is I had a client save an additional $147 on his payment because I waited to lock in his interest rate. Rates were all over the board. All right. Remember I told you we lost a ton of pricing. So I'm sitting there going, God, they just keep going up. I can't get a hold on this stuff as far as getting somebody to lock in when they're at that point. And it finally hit where we were in the high threes. This is the pricing of last week, and I locked them in.
Wow.
And I'm saving him $147. Why? Because I watch rates every week. I see where they're going, and I see the pricing consistently. And really, he didn't even know I was going to do it until I called him and said, hey, we're ready to go. You got to get on this. We got to lock now.
So this is what you do for all your clients. Let me get this right. Once they're in the contract, you're constantly watching it daily. Once it gets to a point where it's as low as possible, you're going to call them and say, hey, I'm going to go ahead and lock you in.
Right. And here's what you also got to look at, though. You also got to look at, well, what is the trend? And that's why I do this, because if the trend is it's going up, I'm kind of telling them, hey, I haven't seen any improvement. You might want to take a look and say, let's lock today. But if you don't, that's on you if you don't. But if I see that it's very volatile, validity in the market, volatility, in the market, you have the ability to look at rates to see them go up or down.
Yeah.
I'm going to really kind of look at the market with them and say, you tell me when you're ready.
Yeah.
And with clients like that, that's a little different because they're already in a position, they're already in a home. Now it's kind of, well, we hope the market, we're crossing our fingers, is going to get low enough for them to save the money that they want to save.
Now, why do you have to wait when the interest rate drops to lock them in? You can't just lock them in now before they get into a contract? Or?
Well, I can, but the thing is with locking in interest rates is that you want to try to give your client the best deal, and I always do. All right?
I like that.
And if I wait and I kind of see what's going on for that specific day, I can say, hey, the rates are getting better. Let's see how this trend goes. We'll see how the pricing goes and how things are going with bonds.
Mm-hmm.
And then if it keeps getting better, then we say, hey, we'll hold off. We'll call it what's called floating.
Okay.
But if it's not, and let's say they start to go the other direction, I'm calling them going, hey, we need a lock.
Lock now.
Yeah, lock it down because you're losing money.
Yes.
And when you're losing money as my client,
Mm-hmm.
I take it personal because I want everybody to leave going, you know what? He really helped me the best way that he could.
Mm-hmm.
And he took care of he took care of me as far as rates, because everybody knows rates are always looked at as the number one thing.
Yes.
Everybody goes into getting a loan.
Mm-hmm.
So I also wanted to tell you, Chuck, how long do people stay in their home?
The average from 5 to 7 years. The reason why is because Vegas is such a trendy city.
Right.
Over 39 million people visit each year.
Mm-hmm.
When they come out here, they want to buy a place and they end up selling. And this is also one of the good places to invest as well because of the market consistently changes. It's like the stock market out here.
Yeah, we've seen new home builds quite a bit. They're starting to really come up, and we haven't seen that in the last few years, and I see an increase in that. So I love where the market's going. If you think you're out there, you're a renter or somebody that's listening to the show, is now a good time to buy? Now is a good time to buy. I can tell you, and we've said this before, in most situations, it's cheaper to have a mortgage than it is to rent.
That is correct.
We got a call on line one here. Her name is Carolyn.
Oh, yes.
Hi, how are you doing, Carolyn?
I'm doing good, thank you.
How can I help you? By the way, happy Easter.
Happy Easter to you as well.
What was your question?
I have a question. I was on title, but not on a loan.
Okay.
Would I be able to get a loan if we short sold the property a year ago?
Well, I think if you have a spouse that was on title, maybe not on the loan, if he was attached to that property in some way, then no, you can't. Because what that shows is that he was a part of the short sale process. Now, I've gotten loans done where if you were not with the spouse before getting into that home, then yeah, you can, that person can get a loan even though if you're married or something's going on where you guys are together, then yeah, they can get a loan. And what the good thing about that is that not every bank, not all options out there, we have bank options for this, but there's not a lot of bank options that will approve this. But I can tell you this, if I can prove the fact that he was not, or they were not on this loan, they were not part of title, but yet you're still together, I can still get him or her back into a loan right away.
But
okay.
She said that she was on title, but she wasn't on the loan. Is that correct?
Yeah.
Okay. So technically, she could possibly get a conventional loan because she was just only on the title, but not on the note.
No, that's if and it was short sold, right?
Yes, it was.
Okay. Yeah. What happens is if you're on title, if you were on title with with your spouse, and then you are both short sold that house, what happens is that you're now tied to that property. So it's very hard to go to an underwriter and say, you know what, we can get this person another loan because when you're attached to it, when you get into the situation, and let's say you guys were together during the process of it, it's kind of like you both were going into it understanding the situation. But if somebody had something before or did something before where they didn't have any part of it, and now they're trying to get a loan even though they're with you or whatever your situation, maybe it's you, then yes, I can get that person a loan because it's really dependent on who was on title, who was on the loan going through the short sale process, and then we just evaluate it from there.
And what's that program that you have, that 1 day out of short sale?
Well, we have a 1 day out of short sale foreclosure program, okay, and that's a great program. It's not for everybody. A lot of times what happens is you have other things that occur on your credit, especially if it's a foreclosure. Now, if you, like you said, it's a short sale, if you strategically did it and you have no other debt or no other negative credit lines on your credit report, then we can get you right back into a home, and the rate starts out a little higher than most. You have to put 20 to 25% down, but if it's something you're interested in, let's take a look at it. Also, if the person you are talking about, yourself or your spouse, was it yourself, Carolyn?
Yes, it was.
So you can try to get back into a loan with me by calling Outside Studio 781-6682. You can do that, and we can really look and see who was on title when this all occurred. If you were not on title, if you were not on the loan, then I can get you financing.
Okay, sounds great.
Okay, 781-6682, okay?
Okay, thank you so much.
Have a good day, Carolyn.
You too. Bye-bye.
All right. Let's go right into what I wanted to discuss a little bit here on self-employed income. And we're going to talk about this because I had a client come in and the self-employed income. We're going to cut to break here. When we come back, we'll go over the self-employed income review, and we got a whole lot of show left. It's Dan French from Nova Home Loans.
Green to nibble on every once in a while, and maybe we can do some exercise on occasion. Let's get to it. After all, we're in this together.
Listen to your heart. Don't let it quit on you. High blood pressure can lead to a stroke, heart attack, or death. Get your blood pressure to a healthy range before it's too late. Find out how at heart.org/blood pressure. Check, change, control. A message from the American Heart Association, the American Stroke Association, and the Ad Council.
Purchasing your first home or refinancing your current home are all major financial decisions that necessitate having the right person on your side. Dan French at Nova Home Loans will work with you from day one to make sure the process is as easy as possible. Contact Dan French today at danfrenchnova.com, or you can call me directly at 702-216-3907. And to learn more about home financing, please make sure to tune into the Market Snapshot every Sunday from 12 to 1 p.m. to find out all the information that's going on in financing and real estate.
NMLS number 369115. Broker number 0902429.
Welcome back to the Market Snapshot. This is Dan French with Nova Home Loans, and we're going to go right back into self-employed income review. Problem most people think with self-employed income is it's easy to qualify because business owners see money coming in. Mm-hmm. They see that they can get a loan because they have profit coming into the business. Self-employed income is also what you got to look at is that it's harder to obtain because the default ratio for these loans carry a higher risk.
Wow.
Alternative solution, well, banks have become lenient with allowing some borrowers to obtain a loan only after 12 months.
12 months? I thought it was 24.
Well,
wow.
it is, but I'm going to go into why there's a 12-month period. So the solution is the truth about self-employed borrowers are banks provide guidelines to make it easier to show stability within the business to offer more loans to self-employed borrowers. 4 types of self-employed borrowers are corporation. You can have a corporation if you're 3 or more people. You have an S corporation, which is intended for a small business. You can issue stock to no more than 35 people as an owner. The S corp can have no more than 100 shareholders. Partnership. The partnership agreements are also very important, as the agreement you draft will dictate how you and the other owners work together to run the company. And then the other one I want to talk about is the Schedule C, which is really an individual that's a self-employed individual. They are always usually one owner, and they file those a lot of times. In most cases, they're always filed with the personal income tax returns. Mm-hmm. So the factors I consider for self-employed borrowers is really the ability of the business to continue generating and distributing sufficient income to enable the borrower to make the payments on the requested mortgage payment. And that's big. Stability is the hardest thing to prove with these.
Yeah.
And I told you they have a high default ratio. Length of self-employment. We talked about 12 months. There's some options out there. It's very, I would say it's a case-by-case situation, but there is some options out there. Normal protocols, 24 months. Verifiable income. That's a big part. And analysis of a borrower's personal income and business tax returns.
So does this all have to be separate?
Yeah, the personal and business, they're separate, but they need to be given to me so I can look at the overall view of that business, including how they're reporting their personal income tax returns. Use of business assets. Are they responsible using their business assets? And what I want to also say is that if you're an individual who has owned 25% or more of ownership in a business, you're considered self-employed.
Wow.
I don't know if people know that, but if you have more than 25% ownership, you're a self-employed borrower.
So you would actually look at the income based upon 25% or the whole thing?
I would look at it as being them self-employed and looking at what the risk assessment is with self-employed borrowers. Okay. So the other thing too is that, like we've said, in normal protocol, a person can typically is a 24-month period to see the spending and how that is spending, how the business is going. And then the ones that are the 12-month is usually somebody that has had that line of profession. They've gone right from that line of profession, right into going into getting that 12 months of self-employment. And they've showed history of working that whatever line of work that they do.
And they got money saved.
and they got money. But they look at the history of it, and then they go right into the self-employed income situation. And if they've only been on there for 12 months, that's easy to prove. You know, obviously it's something that we have to address. Okay, we got to get an approval through underwriting. But I've gotten a few of those done, and it's pretty consistent as long as you can see that the stability of income is the same by using the 12 months, including your history of line of work.
Okay, so as long as you could do the 12 months, as long as you have that history, that chain link that connects everything all together. Basically.
Yeah, I had a doctor get approved with self-employed income because he had a history of working. I think he was 4 years on his job. Mm-hmm. Came right into getting, being self-employed. Actually started to make more money. As we know, doctors make more money when they're self-employed.
Yeah.
And very easy to prove that he's had history of being a doctor. His income is likely going to continue. Mm-hmm. And he's a less risk to a bank.
Makes sense.
So we're going to go right into, I want to tell you, I want to talk about taking title to a property because I think some people need to understand that.
Yes.
They need to understand the process of getting that. What is really the process and how do borrowers take title to property?
Well, to take title to a property, there's actually 7 ways to hold title in the state of Nevada. Now, here's the thing. I can't advise my client on how to take title. So before you even sign docs at the title, the escrow officer is going to ask you, how do you want to take title to a property? Now, if this is a big deal to you guys, please contact an attorney before closing out on the deal. What is title to a property? It's to identify those who own the property and how much control they have, and also what's their dividing interest.
Gotcha.
Now, it gets more technical. We can get into this, but I'm not going to really get into it because we're not going to have enough time. But we're going to start off by number 1, community property. It has to be husband and wife. Mm-hmm. Dividing interest will be equal. Control will also be equal. Joint tenancy. A number of person can be husband or wife or registered domestic partner. Okay. Dividing interest. Owner interest must be equal. Control will also be equal. Tenancy in common. That's number 3. Any parties of people can be husband and wife or registered domestic partners. Okay. Dividing interest. Ownership can be divided into a number of interests, equal or unequal amount. So that's important right there because what that says is that if you own 50% of it, right, I own 25% of it, we have another partner that owns 25% of it, at that point, what happens is we can divide it up that way, okay? Do you have a call?
No, I want to say, though, if you want a free mortgage assessment or have any questions regarding the show, call in studio today at 702-257-5396. Again, you can schedule a free consultation with us, Chakits, or myself at 781-NOVA. That's 6682. You can also ask me a question or tweet me at 781-NOVA. And you can go to my website, danfrenchnova.com, if you want any further information on some of the shows we've done.
Tenancy and partnership. Partners can only be partners, okay? As many partners as you want. The dividing interest is the ownership interest is the reflection of the agreement with the partnership. Control is equal rights, okay? Title to be held in trust, it's individual, groups of people, or a corporation, and a living trust. Now, the dividing interest, the ownership, is a personal property interest and can be divided into any numbers of interest. Now, the rights of control as specified in the trust provision. So that's important. So whatever that trust provision says, that's who has control.
The trust provision, you said?
That is correct.
Okay.
Now, the community property with the rights of survivorship. This is only for husband and wife.
Community property state.
That is correct.
Okay.
And this is the rights of survivorship.
Mm-hmm.
So the dividing interest would be equal.
Okay.
If one spouse passes away, the other spouse will have 100% of the equity of the home.
There you go.
Okay. Number 7.
Yeah.
This is new.
Mm-hmm.
Registered domestic partners. Now, the parties.
Mm-hmm.
Only parties that are registered with the California Secretary of State Domestic Partner Registry.
Okay.
Dividing interest. Ownership interests are equal, except control of business and sole with managing domestic partners.
So if somebody was out and they're like, hey, Chuck, you obviously got a handle on taking title.
Mm-hmm.
You can thoroughly let them know what process they need to take and how and why they need to take title for whatever whatever situation that they're in. Is that correct?
Well, I can give them a general idea what this means, but at the end of the day, I would never advise you. So please contact an attorney.
Right.
Now, also, we have a free buyer's guide. Now, for more details about that, that's all in this buyer's guide right here.
Okay.
And it will give you the complete rundown.
All right.
Okay.
I like that. So we're going to go right into, let's talk about 20 easy ways millennials can boost their credit. We're going to go through this kind of quick. You ready for this, Chuck?
I'm always ready.
Let's get it, all right? Everybody out there has got to pay their bills on time. That's a millennial. All right? I'm just going to start off with that. If you want to improve your credit, that's what you got to start with.
Pay your bills.
Never ditch a phone plan or a utility bill. Why? We can use that as a possible trade line. Check your credit reports from all 3 credit bureaus once a year.
And it's free, isn't it? Like every 6 months?
And what I want to say about that is it's free. But again, if you want an accurate credit pull and you want accurate information, I know it sounds kind of funny here, but you have to call me. One, because I want you to call me. No, but really the reason why is because I want you to call in to my office, because we pull a credit bureau from all 3 credit bureaus, up-to-date information, and it's really going to give you an accurate credit rating. So you do have to call me, and I'd love to talk to you about that. Monitor your credit score. Now, you can do that on your own.
Yeah.
Check your credit score. Improve your credit utilization ratio. Okay? And for you that don't understand what I'm telling you here, to improve your credit utilization ratio, increase your available credit either by paying down debt, getting another credit card, or having your credit card limit raised. You don't want to show that you're living off of your credit cards if you have credit cards.
But it says here, get another credit card.
Yeah, I know. We're going to get into that. Make a small purchase on credit cards, like I just said. I think we just answered that question. That was number 7, too. Become an authorized user on a parent's credit card account. Well, I think that's good if you have nothing. If you can follow another alternative route and doing it on your own, I would suggest that. Build an emergency fund. Okay? And the other one is become an authorized user. Oh, we talked about that. Stop using prepaid cards and develop a relationship with a bank. Number 11 is choose a credit union over a big bank. Why you want to do that? Credit unions might offer slightly more lenient loan and credit card approvals for members. That might be easier for you to get into a credit card.
Hey, Dan, let's go back to number 10 really quickly with the prepaid. So you couldn't use that as far as, somebody obtaining a loan. You couldn't use that, huh?
Well, it says develop a relationship with a bank. So maybe they're saying go to a bank and get a prepaid card. What that is you're putting money, $200, $300 onto a card. You're prepaying it yourself, and then you're using really your own credit. Stay on top of your student loan debt, and I highly recommend that. Okay, if you let that default or you let it you go behind on your student loan debt or your payments, I can't get you a loan. You have to stay on top of that. Calculate your debt load and keep it below 35%. Reason why? You don't want to look like you're living off of credit cards and other things. You want to keep your debt low so that way it shows to a bank you can afford to get another loan. Don't close old or paid off credit cards. Okay? The unused credit card can benefit your credit utilization. Now, I'm going to tell you why that's important. You pay off your credit card, and then if you close it, well, that activity and that trade line activity that you created, which has good standing, you just now removed it. And now you got to reestablish yourself. And guess what? Credit ratings typically go down when you close a credit card.
So would you prefer to have a minimum balance, or would you just have a zero balance?
I would say you want to keep a small balance below 35%, actively use it. But don't go out there and say, I'm just going to pay it all off and then not use it. Because, it's great that you don't have any payment on it, but you want to show activity because it keeps your maximum level of credit rating.
And that really does work, because I actually have a personal line of credit, and it's been about for 5 years now. And what I do is, I have a pretty big budget that I could pull out, but what I do is I'll pull out like $200 and I'll pay it off, every once in a while. I mean, not pay it off, but just make the minimum payments. And it's just like the cost of doing business. So that way I can just show that line of, the 5-year history that this guy's good.
Right.
So that's all that I use that for.
That's exactly right. And I don't know about this one, but we'll still talk about it. Consider moving in with roommates.
Can I move in with you?
Yeah. You can sleep on the couch. All right. If I come home.
Not even the spare bedroom?
If I come home and you don't have dinner ready.
Not even the spare bedroom.
Not even a spare bedroom. You got the couch.
All right.
You're going to sleep next to the dog.
Well, here you go. You can have my 2 eggs.
Never carry a balance on your credit card. Okay. Carrying a balance on your credit card can lead to paying more for everything because of the added interest that's accrued. Don't apply for multiple loans or credit cards at one time. Okay. That's obviously something that if you don't have established credit and you do that, there's a possibility it'll decrease your credit rating.
And that goes back to where, if you keep pulling it, it will affect your credit by the inquiries, right?
Yeah. Use mobile banking. Many banks, and what I think a lot of people don't know this, many banks and credit unions offer mobile banking, which can help keep you with on-time payments. What that shows, again, is stability. You're trying to improve. You're trying to, show to a bank that you can make payments on time. That's a great way to do that. And then never use a credit card to buy things you can't afford.
Yeah.
Like if you're going to go buy a TV and you got a $2,000 limit and you're buying a TV, for $1,500 or $1,800.
Yeah.
Probably not want to do that if you're buying a house.
That makes sense.
Let's go right into 4 quick tips home buyers can benefit from. One is waterproofing your doors and windows can help save you 25 to 40% off of heating and cooling bills. The second thing is doubling your monthly principal to pay down a 30-year mortgage loan fast without pressure of taking on a larger mortgage payment every month. This can be accomplished by making your normal 30-year mortgage payment plus the principal of the following month's payment.
Oh, that's a good tip.
Yeah. Talk to the right people. Reach out to the mortgage banker. That's me. We'll assess your goals. We'll find out and see if there's anything that we can do to help your situation. And then number 4 is use a home improvement organizer. Have a personalized maintenance schedule that reminds you every month of what needs to be done to maintain your home. Right now, we're going to go right into the lender versus realtor face-off. You ready for this, Chuck?
Yes. And I'm going to go first because I got a lot of questions to ask.
You're going to go first?
Yeah, I'm going first this time.
All right.
I'm taking it.
Let's take it.
Debt to income ratio. What is debt to income ratio and how does it work and how does it factor with the client?
Well, the debt to income ratio really is, it's really about how much debt you accumulate over a month, all right? And what your projected mortgage payment would be versus what income you can bring into the household. So when you analyze that and you review it, there's different loan products out there. Okay. Typically, you want to be under 45%. Okay. But I do have loan products that go all the way up to 55%.
Is that kind of stretching it, though, the 55%?
It is very much. So if you got an HOA payment or something like that, you're not going to be able to get into a home.
So lenders typically want you to be around 45%. Is that correct?
Yeah, I would say, depending on loan program, again, you contact me and we'll get that and we'll assess that. But that's typically right.
Okay.
So I got a question for you.
Far off.
Do you represent buyers and sellers on the same house?
Sometimes, basically what we do is if a buyer's interested on a house that we have that's listed on the market, the buyer has a right to know that. And also the buyer and seller must mutually agree that the agent is going to be representing both sides of the party. If not, at that point, we appoint another agent to that buyer or to that seller to represent that buyer or seller.
All right.
Okay.
Fire off.
Here's another one. What are the roles of an underwriter? What do they do?
Underwriters really look at the overall assessment of your credit. They look at the overall assessment of your debt ratio and your qualification purposes with your employment and anything pertaining to you getting that loan. And then they look at the property and see if there's any things revolved around the property that would negatively affect this loan.
Okay.
All right. So that when they make that judgment, underwriters are really looking for reasons not to approve you.
Well, that's scary.
So, yeah, and here's the deal. You have to have somebody like myself that's really going to put a good package together so when they get in, they really can't find anything to not approve you with.
Okay.
All right?
All right, so...
when clients are unhappy with your service, what has gone wrong and how do you address that? Because we're all not perfect. Don't tell me you're perfect,
So
Chuck.
here's the thing. Yes, I am perfect. Now, here's the thing. That means it's my fault. I have not educated the client of what's going on. And that's why it's so important that once we sit down with the consultation, we go through everything with our client as far as what's going on with the marketplace, what to expect, what's, customary practices.
Right.
Now, if we do have an issue after we go through the whole consultation, we sit back down and we address those issues to make sure that we are on the same page. Now, what is the purpose of, I guess what I'm trying to say here is if you have a file that goes to underwriting,
right,
then from the file that goes to underwriting, it goes to quality control. Why does that file have to go to quality control when the underwriters already approved it? Why does it have to go to quality control before the money's funded?
Here's how it works. Quality control is really making sure that whatever's on the loan and the agreement on the loan within the borrower has signed up to, the underwriter's job's done. So the underwriter has no affiliation as far as quality control. Now, quality control is, now we're going to get it in line. It goes through a quality control with processing before it gets in underwriting. Then after it gets out of underwriting, it goes through another quality control, if you want to say, because now we're putting docs together and we're going to docs. And that quality control really is to have our doc drawing department really overlook everything pertaining to that file and make sure that everything is matched up to what the original agreement was. Now, that quality control, is that a department in-house or is it somewhere?
It's in-house.
Oh, it's in-house? Okay. Yeah, we have an in-house quality control department. Yep. Are your client? Let me ask this question. You have a lender, inspector, or other service providers. Do you recommend? How many people do you recommend off that? Meaning, like, let's say if somebody comes to you and says, "Hey, I need to get a lender. Do I need an inspector? What other service providers? You reference these, but you also give them information that, hey, you don't have to use that specific person. Right?
That is correct. And as an agent, we can't really do that because it would be steering. But what we do is we give our clients options if they don't have a professional that they can use. And let's just say if they talk to a lender or they want to know what lender to go with, I explained to them the detail. Number one thing is you don't just go with the first lender because even though that he qualifies you, the things that you need to look out for is a good faith estimate and to see what type of fees that they are charging you. So those are one of the tips that I give my clients.
We're going to go to a call here. Nicole's on line 1.
Hello.
Hey, Nicole, how you doing?
Good, thanks.
Good. How can I help you? Welcome to the Market Snapshot. Thank you for calling in, and happy Easter.
Oh, happy Easter to you, too. Thank you. I'm calling because I'm curious. I recently looked at a home that had mold painted over, and I wanted to know if there was a way my realtor had a better way of detecting this.
That's Chuck's.
That's a pretty good question. Now, here's the thing. As an agent, that's not their profession. They're not going to know that. Only a home inspector could identify it. But anything that's latent defects, that's what's behind the wall, nobody can't see it. But a home inspector should be able to take a look at that and they have a general idea. And within a report, it should tell you right off the bat saying that, hey, you need to seek some professional at this point. And what we do as an agent is we put a roadblock and a contingency and don't move forward with the sale, the transaction until the issues are resolved. But now here's the thing. When I go out to a property and we're writing offers on properties, and this is the reason why I go out with my clients, okay? I don't just pass you off to my buyer's agents, okay? You guys call on the show. I personally take you out. And the reason why this is important is because I've been doing this long enough. There's certain things that I can identify up front.
Right.
And say, hey, we need to address these issues before we even go under contract.
Correct.
I'm not going to catch everything because I'm not an appraiser or an inspector. But, from my experience, from the reports, I know what to look out for.
Did that answer your question, Nicole?
Absolutely, yes, definitely. Thank you so much for your help.
Thank you for calling. Hey, if you want to schedule a free consultation outside studio, 781-6682, that's 781-NOVA. And I want to say thank you for calling in, okay?
Thank you. Have a wonderful day.
You too as well.
Bye-bye.
I also want to tell you what separates me from my competitors. I'm going to go over this real quick. We have in-house underwriting and funding. We tell you every week why that's important. I have control over all of that. My company does, so it really expedites and provides efficiency to get your loan closed. We have the ability to meet or beat close of escrow date. That's very important. You don't want a per diem or any other additional fees that comes to your loan. Status online progress updates, 24. You have status online updates that's consistently given out by email, and it's a checklist of things that occurs at the time an event occurs. Let's say it's like we said, an appraisal, or you're going to underwriting. You're going to get a checklist off from me. And then I'm also going to follow up with a Tuesday status call to update you on where your loan is at and give you the details. We also have we're a 7-day-a-week service. Chuck, you're working after this, right?
That's correct. We're writing offers.
I'm going right to the office after this one. I got a couple calls to make, so I'm telling you, if you guys have questions out there, give us a call.
We literally do this 7 days a week. We only take breaks.
Also, we're going to also talk to you guys about what's free. All right, and this week we're going to actually give a free gift card to P.F. Chang's. All right, and we're going to give that to our first caller. Doug has wrote that down, and so we're going to give that away, and we're going to start giving that away every single week. So if you guys want a free gift gift card to P.F. Chang's. We're going to start giving that away. The other things we offer for this show only is a free CMA. Chuck's already talked about that. What is that, Chuck?
Stands for Comparable Market Analysis. This is a report for a buyer or seller to identify a value of a property within a community. It will show you within the report everything that's for sale, in contingent status, pending, and sold.
We give away a free appraisal, free home inspection. We told you there's value. We want you to come in and meet with us so we can provide that to you. Any money you save on getting your loan or getting a home, it's very, very beneficial to you. And any way that we can, we're going to give back that we can, anyway. So definitely take a look at that. We give a free first-time home buyer guide. What is that, Chuck?
It's a great book. If you're a first-time home buyer, this will lay down a foundation, a step-by-step to the path to home ownership.
And we also give a free consultation, and I can also provide free credit services. And then the other thing I want to tell you is that we look at what is the key points to finding a loan officer. We've said this before. Everybody looks at interest rates first. They look at they really stop there in a lot of ways. And I tell you, there's other things that come into play. It's not just interest rates. You have to look at the fees the company's charging you. You have to look at the overall service, and then you have to look at what is the loan officer doing. Is he really paying attention to my needs? Is he really putting that game plan or that blueprint like I tell you I'm going to do, and get you into a position of what you're trying to accomplish and what your goals are? So I want to also tell you guys, we put together, if you want a free mortgage assessment, or if you have any questions on anything regarding the show, you can call us outside studio. You can call us outside studio for a free consultation at 781-6682. That's 781-NOVA. Remember, everybody out there that's listening, we put this show together for you to become a smarter home buyer. This is Dan French from Nova Home Loans. I'm here with Chakits Krulawat from Simply Vegas, and I want to say thank you for your listenership.
Well, here's the Joyous Bunny's first stop. Here's the Easter Rabbit, hooray! The happy Easter Rabbit. Here, kid, have an egg. I want an Easter egg. I want an Easter egg. I want an Easter egg. I want a... Why, you little...
The new home of Sean Hannity in Las Vegas.